I do not think the U.S. is currently in a recession. And the reason is there are just too many areas of the economy that are performing, too well.
So if we're not heading into a recession, why hike interest rates? Let's get into it with tonight's party panel. We've got Washington Times opinion editor and Fox News contributor Charlie Hurt is back. We've got radio host, Democrat strategist, also a Fox News contributor in luscious hot pink, hotter than ever, Leslie Marshall. And we've got director of the Libertarian Institute and antiwar.com editorial director, Scott Horton. Yes, yes, and a triple yes for all three of you. So they keep citing these economic metrics which show the economy is doing great. And they keep talking about the jobs numbers, but even Jerome Powell said the job market is unsustainably hot. That means that employers will continue to have to raise wages in order to attract workers, which will only raise prices further, which just makes inflation worse and the looming recession that much more certain, Charlie.
Yeah, no, it's the only thing that's worse than paying $6 a gallon of gas for gasoline and getting a grocery bill for $500 is being told by the White House and other politicians and people like Jay Powell that, oh, no, we're not in a recession. Get over it. It's not that bad. It really is that bad. And I think you're so right to point out the issue of what it puts a family through in order to get a mortgage to buy a house. The super rich, the people that are paying all this money to the Democratic Party, they're not affected by this. No. But if you try to take out a mortgage to buy a home or to refinance your house to get some money to pay a tuition for your kid or something like that, you're paying monstrously more money, and people do feel it, and insulting them by telling them that it's not that bad is not a very effective strategy for going into an election.
No, and mortgage rates are only going to go up. And when that happens, Leslie, it's not just mortgage rates. Borrowing any money is going to be so cost prohibitive, people won't be able to do it. And when they can't do that, they're not buying houses. They're not taking out construction loans. They're also not starting businesses. So none of this ends well.
And you're also not able to sell your house.
Yes, that's we are already seeing housing slowdowns, and applications for mortgages are down 6% just in the last couple months, Leslie. So how do you make things better?
Well, not worrying about a label, because I would agree with you, Kennedy. It is a voter's perception, not necessarily the reality. You have economists that say we're in a recession. You have economists that say, hold on, don't be such pessimists. And then you have economists who say we're not there yet. So it depends on who you ask. But when you look at the American person, the voter, whether they're a Democrat or Republican or independent and don't want to affiliate with a party, they're feeling it. But then again, economists are also saying one of the reasons many of them are saying we're not yet in a recession, and some people may say it's just a label, but when you do see over 40 days of gas prices that have dropped, when you do see unemployment that continues to be low, and even though you talked about jobs and when we're seeing numbers coming out and squeaking out that improve, we do still have the problem with inflation, and that's exactly why the feds are increasing. They should have done a titration. That's what economists are saying, instead of hitting everybody like this, so Americans are feeling it even stronger because the feds have done it so aggressively and so quickly so many times in a short period.
Yeah, but you can't treat the sickness if you don't diagnose the illness in the first place. And the Fed didn't do that. Jerome Powell didn't do that. Janet Yellen didn't do that. And now they're not going to admit that they were wrong. But, unfortunately, Scott, we're seeing the ills of central banking play out in real time, and it will really hurt people because what they have to do is cool the economy down so people stop hiring, and, then people lose their jobs and their homes and their life savings, and that is bad news.
Yeah, that's absolutely right. Ron Paul said over and over, people have got to learn Austrian school economics. And, I have my own little Libertarian Institute, but really the best is Mises.org. That's MISES.org. And that's the home of the Austrian school economists who, like Ron Paul, explain that the recession is the correction from the period of artificial prosperity that's brought about by our inflationary monetary system. When they're raising the interest rates, forget denying there's a recession. They are trying to create a recession,
Yes.
as you just said, Kennedy. They have to create a recession in order to essentially, they have to raise the interest rate so high that people stop taking out loans. Because it's not just the Fed that creates new money, it's the banks create new money every time they make a loan. So they have to essentially, like they did in the early 80s, late 70s and early 80s, force essentially a depression in order to get a hold of the inflation. And the problem is that they have to raise the interest rate so high to do that, that would absolutely break the federal budget because they can't pay the interest on the debt. So instead, we get the worst of both worlds. We have some interest rate hikes, but not enough to solve the inflation problem, but enough to crash some markets and enough to give us the worst of both worlds, an inflationary depression, which is how people lived the entire 1970s, and remember they called it the malaise of essentially just spinning our wheels for a decade.
Yeah, and it was funny because Kamala Harris used that term in a speech just a few months ago, and it was like, lady, do you have no grasp of fairly recent history?